Twitter announced last month in its IPO filing that it is looking to raise $1 billion when it goes public. No date has been announced. Could be next month, or it could be early 2014. The news has been getting some mixed responses based on the financial details submitted to the SEC in their S1 form. Let's take a look, shall we? Twitter has 218 million monthly active users as of June 30th, and this is up 44% from last year. This is a good sign for them, but the growth from their user base can't continue indefinitely. 34% of the world's population uses the internet, and of those, about 9% use Twitter. For comparison, Facebook has roughly 5 times the user base, which is about 45% of the world's internet users. If Twitter can sustain their current growth rate for the next 10 years, they still won't have as many users as Facebook does now. Such a growth rate might not even be sustainable, as it could be argued that Twitter is more of a niche app than Facebook and just doesn't have the same widespread appeal. So why does this matter? Maybe it's fine for you and you don't want to talk to your grandma on Twitter anyway, but you should call her. You know, she loves you. Well, Twitter made around $240 million in revenue during the first 2 quarters of the year, but they spent more than that and are actually in the hole for $69 million. Twitter hasn't made a profit since its inception. This is in stark contrast with Facebook, who is making a profit of $300 million in the quarter before their IPO. Once they go public, Twitter will be under even greater pressure to make a profit, and that won't likely mean anything positive for users. We can expect to see much more in the way of advertisements such as promoted users, tweets, and trends. No, Twitter, I don't want to follow Frito-Lay. If they go too far, spackle their app with ads, or stoop to forcing users to watch video ads, they may end up shooting themselves in the foot and kill off their user base. How else might they make more money? Facebook on a per-user basis actually makes more as twice as much as Twitter. So in addition to growing their user base, they need to make more money off the users they already have. Part of the problem might be that Twitter's large share of mobile users yield less ad revenue than the regular internet users. The other factor which may be hampering Twitter's ad revenue is that their users more often than not don't use their real name, as compared with Facebook, and aren't connected with all their friends and family and don't have all sorts of metadata filled out about themselves. Those relationships and metadata are important for advertisers, so they know their ads are going to real people, what their age, professions, and interests are. I think one of the first changes we'll see from Twitter is them encouraging users to fill out more metadata in their profiles so they can sell more targeted ads. Others suggest the firehose nature of Twitter is a problem, and that folks that don't actively prune their following list are inundated with noise and end up quitting Twitter entirely. One solution may be for Twitter to selectively filter out tweets from your feed from overactive users that you don't interact much with. So it could be that we'll be seeing a lot of changes to Twitter in the near future in order for it to grow and turn a profit, and we probably won't like them. Others suggest that